Hello traders, this is Blake Morrow with ForexAnalytix and you're listening to the week ahead video for October 27th, 2019. I'm actually filming this a day earlier than normal. We have some plans throughout the weekend and I wanted to get this out to you and make sure it was timely. But the reason why I need to note that is because it's Saturday. And there's obviously any type of news could hit the wires between now and Sunday before the FX market open, could alter the price action a little bit from what we've seen at the end of the week. So I want to make note of that just in case you guys are watching this and you're like, well, what about that? And what about this that happened over the weekend? You know, with Brexit headlines possibly coming fast and furious. It seems like there might be some Chinese news over the weekend. We might have an alter of where prices open. So it's just something to note. Okay, but what we're going to talk about for this video is basically the price action of last week and what we're going into next week, hence the week ahead. All right, so before I get into the video and I get into the into the charts, let me just say that if you guys haven't tried out ForexAnalytix, do so. It's only $1 for 10 days. Now, check this out. We changed our pricing, not necessarily our pricing of our premium product, okay? We have our premium product, but we also have a light version. For those of you guys that are like, oh, well, I can't really afford $120 a month, which I get, especially if you're just starting to trade the FX market. You want something, a little bit less expensive, or maybe not premium. You can try the light version. But the good news is when you try out ForexAnalytix, you get to test the premium version for 10 days. Then you'll be allocated into the light version if that's the way you decided to use ForexAnalytix. And that's great because this way you can download the mobile app. You can get the basic technical analysis, all the candlestick formations, and all that information is delivered right to your phone or your mobile device, whether it's an Android or Apple device. So make sure you try out ForexAnalytix. Like I said, it's only $1 for 10 days. Give it a whirl. All right, so this is going to take you to the premium version. By the way, this is the data flash. This comes with both versions. I'm going to move it out of the way just so I can show you guys the charts and whatnot. So, and this is the platform for those of you that are not aware of looking at it. Now, I did upload all the charts this weekend. I've done all the basic technical analysis. Obviously, I don't do the harmonic and Elliott wave analysis. That's from our other team members, and the macro analysis as well. But all the basic and candlestick analysis is fresh. So a lot of this, if you've already read it, because I published it Friday evening, you're gonna be familiar with a lot of these charts. But that's okay because I want to talk about what we've got going on for the next week. So first and foremost, let's talk about the dollar index now. When you're talking about the dollar index, the index itself, it broke out of this ascending wedge. Now, what you'll notice here is we actually have a channel as well, okay, that's been developed. It's a channel, but we have an ascending wedge that broke lower. So that in itself is a bearish development, that we broke out of the ascending wedge, which means that over time, I think that we will attack the 95.30 level, which is the 38% retracement of the low to the high. Does that mean it's going to be in a straight line? No. Obviously, this week was a great indication that that's not going to happen. So if you look at the daily chart, we still have a flag pattern. You can see this breakdown here, flag pattern. We're testing the upper end of the flag. Now, we could stretch to the dollar index all the way up to the 38% retracement and not really alter the picture, which comes up to 98.09, and that's also some previous support levels that you saw back here in September. So that's doable. Now I want to show you an alternate to this analysis if I take you over to live charts. So this is that fib, right? Here's the high to low that we were just talking about, the 98.09. But if you take the actual last down move, we stopped at the 38% retracement that comes in at 97, 90, 92, 93, depending on, exactly where you drew the high and low. So could the dollar index bounce be over already? Possibly. I think that there might be a little bit more juice into it, especially going from Sunday to Monday, into Tuesday. You tend to get turnaround Tuesday, if you will. That does happen in the currency market as well. So, could we stretch our legs a little bit more? Yeah. And so what would that mean for some of these other currencies? Well, if you take the euro dollar, for example, the euro dollar has pulled back, as you can see. And by the way, the euro dollar had the same, let me go this direction. We had the same descending wedge. We broke out of the descending wedge, and we got a little false breakout. But remember, the dollar index is not just all the euro. The euro makes up more than half of it, but there's more to it than that. The thing about the euro, it's also pulled back to the 38% retracement, really close to it, 110.67. We came down, I think, at 110.72 at our lowest. We have a trend line that is offering support that comes in right around the this previous resistance here at like 110.65. So a lot of support that the euro is going to be coming down into, and we frankly could probe even a little bit lower down to the 50-day moving average, especially if the dollar index continues to climb. But do keep in mind, we have a lot of really key events coming in next week, namely the FOMC, and yeah, we have a jobs report. Actually, it comes in on November 1st. So that's something else that we have to think about. All right. And, obviously the Brexit deadline at October 31st, which is obviously going to be pushed back. But for what reason, what election, how long, we're still waiting to find out. Maybe we find out between now and October 31st. I'm hoping we will. Because if not, we are facing a hard Brexit. That's a completely other story. Matter of fact, let's take a look at the cable. The cable, has pulled back. You can see we have a nice little bull flag pattern developing. Is the bull flag pattern developing from here, or is it developing from here? It's hard to tell, but you can see we're very, in an orderly fashion, pulling back towards a 50% retracement that comes in at 127.62. All right, dips are very shallow in the pound, and that's one of the themes that you're going to notice with a lot of these majors, dollar-related pairs, is the dollar bounce or the pullback in the major currencies have been very minor, and that should be alarming if you are a dollar bull at this point. Is it possible that the dollar rips your socks off and just continues to rally from here? Sure, of course. But for right now, the bounce has been fairly minor, and you look at the cable based on moving from 122 to 130. That's a 800-900 pip rally that we saw in the cable. We've only pulled back 200 pips. Now, why is that? Well, the reason why that is because we all understand that the UK is probably not going to have a hard Brexit. That's been pretty much moved off the table. We're going to get an extension from the EU. The question is how long, and is there going to be a general election in between, and how's the UK going to move forward? That's obviously brought in some uncertainty that's allowed the cable to pull back. But frankly, as long as we're above 127.5, maybe 128, it's hard to be bearish the pound, especially this is the weekly chart that we've broken this really massive downtrend line. And as long as we hold above that, again, I'm having a hard time really being too bearish the cable. I think the pullback has been very minor. Does that mean I'm going to run out and buy the cable? No, I think I need to see some green lights. I need the green light, if you will. I need to get some reason why I should be buying the pound right now. More or less an all clear. Once I got an all clear, I think the cable has a lot of room to move back up into the mid 130s, maybe even higher than that. All right, let's take a look at the Aussie. You'll notice if you look at just the overview screen, or my partners and other ForexAnalytix members like to call this the traffic light screen. Notice it's all yellow, which is basically very neutral on for every different type of analysis. The Aussie dollar. One of the things that keeps me neutral in the Aussie, frankly, is yes, the pullback has been fairly minor, but you'll notice that we have lower highs. And until we take out that 69 cent level, I'm a little concerned because we're not making higher highs. Now, once we start making higher highs and we take out 69 cents, and that means we break above the September highs, that would turn me bullish because what you saw down here is a respect of the support or even a possible false breakdown, which tends to lead up to a breakout to the upside. Now, we do have inflation data coming out from Australia this week, which I doubt it's going to move the market too much. It's what's going to hold the Aussie up or allow it to rally is really U.S. and China coming to a trade deal. And once that happens, I think it's the green light for the Aussie to go higher. And speaking of which, we have to talk about risk appetite. The one thing that makes me a little worried about continued U.S. dollar weakness, at least against the Antipodeans, the Australian currency, is look at the Kiwi. The Kiwi had, and let me show you this weekly chart. That's a gravestone doji or a pin bar. It's really an ugly looking weekly candle. It is. I mean, the daily charts isn't, we're not doing any favors here. We have a Marabuzzo candle. It's a black candle. Well, red in this case, but, black, white, down, up. Black being bearish. It's a pretty bearish candle that is developed on the Kiwi. So it makes me a little worried about trying to buy Aussie dips unless we get the green light. Like I said, from China-U.S. trade deal has been struck, inked, hand shook, snail mail. However, Donald Trump and President Xi want to finalize things. But once we get that all clear, then I think that that gives us the go ahead for U.S. dollar weakness against the Aussie and the Kiwi. Now, one of the currencies, I know you guys are expecting me to talk about this, so I have to let's talk about the elephant in the room right now. What is the elephant in the room? It's dollar Canadian. Now, a lot of people, myself included, we like to look at the U.S. dollar Canadian as more of a lead indicator. And right now, the dollar Canadian is breaking a multi-year trend line that spawns back from 2012. We are below that trend line. We closed below it this weekend, or the end of this week. Now, you could say, well, the daily charts are pretty oversold. Yeah, I get that. The Bank of Canada is meeting this week. Yeah, I get that too. They are meeting on Wednesday before the FOMC. But do you know what the Bank of Canada is doing and what the FOMC is not doing? Or let me rephrase that. Do you know what the Bank of Canada is not doing, but what the FOMC is doing? More than likely this week. Yeah, the Fed's likely to cut rates, and the Bank of Canada is likely to keep rates unchanged. Yeah. So that already you can see why the Canadian is already strengthening against the US dollar. Now, on top of that, we have an extreme likelihood that USMCA, the new USMCA, the old NAFTA agreement, is going to be, ratified. And so that could be one of the reasons why the US dollar Canadian and the dollar Mexican peso, why the peso is so strong and the peso is trying to break down as well. These are big developments for the peso and the Canadian. Can you make the argument that the dollar Canadian is leading the dollar index lower? It's possible. I think there's reasons why both of them are heading lower, but the fact of the matter is the dollar Canadian and the dollar Mexican peso look extremely weak. The Mexican peso and the Canadian dollar look extremely strong. Like I said, if there's a China-US trade agreement inked over the weekend or maybe next week, the Aussie and the Kiwi are going to rally probably pretty substantially. And then, when that happens, or if that happens, the Canadian dollar will follow suit. And I believe that the dollar index in itself is going to probably, roll over. So it's worth watching the US dollar Canadian and the US dollar Mexican peso. I have, just so you guys know, I've been trying to play the dollar Mexican peso on the long side. This last week, I was buying it as we were attacking this long-term trendline support. I took a loss on it because it couldn't bounce. It was just trading so heavy. And obviously by the end of the week, we started to break lower and we closed near the lows of the week in the dollar Mexican peso. And It depends on the quotes you're looking at. What set of quotes from what broker you're looking at. We're attacking that long-term trend line, and I believe that if we get a sustained break below 19, that it's actually breaking lower, which is interesting. I thought the dollar Mexican peso was developing a long-term bullish flag pattern on the weekly chart. Here, I'll take you over to the dollar Mexican peso. Let's take you over to the weekly chart. Let me allow that to upload. See, I thought we were going to develop this long-term weekly chart and it was going to break higher, but we are actually, and like I said, I was willing to take a shot at it, buying it on support, but like I said, it was trading so heavy that I just got out of it for a loss. And the fact of the matter is, we're trying to break lower. And I think, like I said, a sustained break below 19 is going to be quite bearish for the dollar Mexican peso, and the dollar Canadian. While I'm on these live charts, the dollar Canadian, I think a break below 130 is going to be extremely bearish for the dollar Canadian, and like I said, in turn could be really bearish for the dollar index in general. A couple of the other things that I'm looking at that I want to bring to your attention really quick before I let you go. And we don't forget, we have to talk about all the events that are coming up this next week. So just don't think once I'm done with these charts that we're done. I've got to cover just a couple last things. I want to talk about some of these yen pairs. I mean, you look at like the euro yen. Look at the daily chart. That's flat. That's a bull flag, right? Bullish flag pattern. If we break out above like this 121.50, I mean this thing's gone. We're gonna cruise right through that 200-day moving average. It's not just the euro yen. You got the look at the Aussie yen flagging, right? Right. Look at the Canadian yen threatening an upside breakout here, big time. All right, it was looking like it was developing some sort of an ascending wedge, but man, we break above 83 like 30, 83.35. I mean, the Canadian yen's going to rally. Wait, there's more. Where's the pound yen? There it is. Here's the guppy flagging. Whether the flag starts here or whether the flag starts down there, it doesn't really matter. We're still just consolidating these gains. Looks pretty bullish, doesn't it? All right, then you take the stock market and you go, oh, but Blake, the stock market's just having a hard time with 3,000. Yeah, but look, we're trying to break out. We didn't close at all-time highs. We didn't close above like 30.25 or 30.30 or whatever the number is. But I mean, a lot of people are trying to trade in this megaphone pattern. Hell, I still believe that there might be some sort of blow off top, and by the looks of, and let me just show you what I mean by that. By the looks of the yen pairs, look like they have a lot of upside, which tend to be pretty highly correlated with the S&P. What's to say that the S&P can't do a real quick move up to like 3150 or 3200 before reversing? A lot of people, I think, are going to try to stand in the way of the S&P around 3050 because of the big, megaphone pattern that everybody's, been talking about forever. That's not what I want to do. All right, this megaphone pattern right here. Well, how about if we blow past it? How about if we blow past 130.60? RSI starts to break out over here. Something like this. You could note the divergent relative strength, but how about if we start breaking out? All the yen pairs look so strong, and the S&P is, flirting with, this, all-time highs and, some pretty key resistance. How about if we get a Brexit extension, right? How about if we get a China-U.S. trade deal, right? How about if we get USMCA passage all within this next week, and we get a good jobs number on Friday? Maybe the S&P blows up. Right? And all these yen pairs that I just showed you look extremely strong. They continue to rally as well. All right, so be careful if you're fading risk at this point. That's just I know we're up against key resistance. It's hard for me to press the button and say, oh, I want to be long S&Ps right here. But, again, let's take a look at some of those yen pairs. Now, really quick before I go, we have a lot of data coming out this week. On Tuesday of this next week, we have consumer confidence, the confidence board, consumer confidence for the U.S. We actually have Tuesday night, Wednesday morning in Australia. We have inflation data out of Australia. Now, Wednesday is a jam-packed day. We have U.S. advanced GDP. We have ADP non-farm, which is private sector jobs data Wednesday morning. Also, early in Europe, we have German CPI, so we have German inflation data. And by the way, if you want to follow along with me here on all the data that's coming out this next week, if you just look here at the calendar, you can go this week. We have to go to the next week. This week. All right, and then this week. Okay, so. Actually, you have to go for the next week. But anyway, I'm gonna just rattle this off so I don't waste my time doing all that. We have FOMC statement on Wednesday. All right, we have the Bank of Canada rate decision. So we have the FOMC rate decision, and Bank of Canada. We also have Chinese PMI Wednesday night. We have the BOJ rate decision, which tends not to be a market mover, but you never know, especially with all those yen pairs that we were just looking at. That's Wednesday night. Thursday morning if you're in Asia. Thursday, we have Canadian GDP. We have personal spending. We have PCE out of the U.S. Thursday morning. All right, we have Chicago PMIs also, which is a nice lead indicator for some of the manufacturing indexes. We have Chinese PMI Thursday night or Friday morning if you're in China, and then also just to top it all off, we have FOMC on Friday. Oh, on top of that, we have the Brexit, hard Brexit date, October 31st, which happens to be Halloween, which I hope we can get an extension of some sort so it doesn't ruin my Halloween festivities with my kids. And all the trick-or-treating that we're going to do. I want to be able to really focus on that versus Brexit, but who knows? That might be something that we all have to deal with. But anyway, it is a jam-packed week, and there's a lot developing here. And as you guys see in the currency market, technically, there's a lot to look at. So, guys and gals, I hope you found this video insightful, and if you did, please give us a thumbs up on YouTube. It always makes myself and the rest of my team very happy about producing these videos and delivering them to you for free. Also, remember, this video was filmed on Saturday. There could be a lot of headlines that hit the wires between the time that I filmed this to the time that you're watching it, so watch that for potential gaps in the market come Sunday when the FX market opens in Australia, New Zealand, Monday morning. So guys and gals, my name is Blake Morrow with ForexAnalytix. And remember, if you haven't tried out ForexAnalytix, do it. Try the light version. It's only $19 a month, and it's only $1 to try it out. And you get to try the premium version at the same time while you're trying out for the cheaper light version. So give it a whirl. All right, guys and gals, have a great remainder of your weekend. I'll see you on Monday.